with job costing, we are looking at the situation that a specific job, a job is a unit of item, a unit of production. So basically, we are looking at that a unit of production or an item that has been produced is made to reflect a specific characteristic or a specific request of a particular customer. So it means that when we are performing a job, it means that if you have a tailoring outfit, that what I will be requesting will be different from what someone else will be requesting. It means that if we charge or a flat bill, I'm actually going to take into consideration the fact that the material or the labor that I need to perform that specific job will be different from the material or labor that will be needed to perform another job. Are you with me?
Yes.
Okay. So the material and labor that I'll need to perform one job. Remember, a job is a unit of production. So what I'll need to produce one job will be different from what I'll need to produce another, having in mind that our customers are requesting different things. And so the jobs are not uniform in nature. The jobs are unique. The jobs are different. So it means one job will have a different cost from another job. Yeah. So what is the major issue when we are looking at job costing? What is the major area that we need to look out for when we are looking at job costing? Major problem area that the examiner is always looking at. The major problem area is the determination of the profit. Or let me say the calculation of the profit. I think that is better. Agatha, can you hear me?
Yes, ma'am.
Okay. So the calculation of the profit is a major area that the examiner is looking at. When the examiner is looking at examining job costing is going to be part of your 35 OBJ questions. It's going to be part of the 35 OBJ questions where you will need to pick. So it's going to be a 2-mark question, or probably maybe 2 or 3 of it. Maximum you can get from this job posting is going to be 6 marks. Maximum is 6 marks you can get from here. What would the examiner be looking at examining? The examiner will be looking at, can you calculate the profit? Can you estimate what the profit is going to be? Because he already knows that you know how to calculate direct material cost. You already know that you know how to calculate direct material cost. So in arriving at the cost of the job, you'll be looking at, so in determining the cost of the job, I'm not recording the cost of the job. The examiner already knows that you know how to determine direct material cost. Is there anybody that doesn't know how to determine direct material cost? In determining the cost of the job, you'll be saying direct material cost. Direct material. So you'll be saying direct material plus direct labor plus production overheads. Amarachi.
Yes, I'm here.
What is production overheads?
All the indirect costs. During production.
All the sum of direct production costs. So when we're looking
at all indirect.
Yes, the sum of all indirect production costs. So when we're looking at the sum of all indirect production costs, we are looking at indirect material, we're looking at indirect labor, and we're looking at indirect expenses, right? Yeah, you agree with me, right? You agree with me. So if there's anything like direct expenses, good and fine, you add that. So if there's anything like direct expenses, you add that. Then when you have this you have total job cost. All right, so you have the total job cost. So when you have the total job cost, this is not the quotation for the job. The quotation or the quoted price of the job is the total job cost plus any estimated profit margin. Yeah. So how do you determine profit? Determination of profit. How do you determine profit? Yeah. So profit will be calculated based on what the organization has two methods, right? So in determining the profit, the manager will be looking at two methods. The manager will be looking at one of the two methods. The first is calculating profit as a percentage of selling price, which is called profit margin. Calculating profit based on a profit margin. Calculating profit based on a profit margin. When we are calculating profit based on a profit margin, we are basically saying that the profit is calculated, profit is computed as a percentage, as a percentage of the selling price. And then the second is calculating profit, what is called a markup. Calculating profit based on a markup. So we are saying markup is when profit is calculated as a percentage of the total, as a percentage of the total cost of production. So basically we have two methods, profit margin and profit markup. Profit markup is also called markup on cost. So this is also called markup on cost. So this is also called the markup on cost. So we have profit calculated as a percentage of the selling price, profit margin. Then profit calculated as a percentage of the total cost of production, markup. Do you have any question?
I do.
Okay, please. Can you type the question? Profit is calculated as a percentage of the selling price, When profit is calculated as a percentage of selling price, we call it the profit margin. When profit is calculated on cost as a percentage of the total cost of production, we call it markup. And I said this is what the examiner would be looking at when he is testing any question on job costing. He is interested in whether you know how to calculate markup or margin. So any question that he will be bringing under job costing will be centered around the determination of profit. He knows you will not have a problem with determining direct material, because basically for you to determine the cost of direct material, you will be saying the quantity per unit times quantity needed per unit. Yes, right? Correct. So Amarachi is saying when profit is calculated as a percentage of the selling price, given the profit already added to the selling price, as in before determining the selling price, the profit is already added. Yes, yes. Yes, says if the producer says my selling price is going to be 1,000, then you can easily determine his profit to be 20% of 1,000.
Okay.
So you can easily determine his profit to be 20% of 1,000. But when a producer is saying, I want my profit to be determined based on total cost. No, when a producer is saying, mark up my profit, I want a markup of 20%. When a producer is saying, I want a markup, I want my profit to be a markup of 20%. So he's saying he wants his profit to be 20% of the total cost. That means he wants the total cost itself represents 100% and the profit represents 20%. So when we are looking at profit markup, we are having the idea, when we are dealing with profit markup or markup on cost, we are having the idea that our total cost is 100%. Profit is whatever percentage has been decided, and the selling price is 100% plus the percentage of the profit. So basically, when we are looking at profit margin, we are saying selling price equals 100%. Yeah. The profit itself is any percentage determined by management. Say let's say 15%. So let's say 15%. So if management decides that we want our profit to be 15%, then when we are dealing with profit margin, we have in our heads that selling price represents 100%. Selling price represents 100%. So if selling price represents 100%, it means that my total production cost, it means that my total production cost or total cost, let me use the word total cost now. It means that the total cost of the item it means that the total cost of the product would equal 100%, 100 minus 15. Yeah, 100 minus 15, making it 85%. I hope this is clear, Marachi.
Yes, it is.
The concept of profit margin is that your selling price is always 100%. Your profit is whatever percentage you as a producer or management have decided. So in this 15% off selling price, So 15% of selling price, meaning that our total cost will be 85%. Because if selling price represents 100%, then and you say 100% minus 15%, which is the profit, then your total cost of production must not be greater than 85%. That is the concept of profit margin. But when we are looking at markup on cost, saying that the total cost of the product equals 100%. Profit is whatever management decides. So in this case, say another 15%. Right? So with mark situation is calculated as a percentage of total cost. So in this instance, selling price equals 115%. Total cost is 100% plus profit of 15%. I hope this is clear. Agatha. Mirabel.
Yes.
Agatha. Amarachi.
I'm here.
Okay, I hope this is clear.
Yes, it is.
I hope the concept of profit margin and markup on cost is clear. Yeah? Did I hear yes?
Yes, it's clear.
All right. So basically, I'll run through job costing again. When we are looking at job costing, we are looking at the situation that a particular job, a particular product is made. That product is a job because it is done to the specific requirements of a particular customer. Different customers will have different specifications for the job that they want. So we can't lump it together. We cannot cost it together. So it means that when a customer brings a particular job, it has to be done separately. It has to be costed separately. So what are the different steps that will be taken in job costing? When a customer comes in, we entertain that customer, bring in that customer, take what that customer wants, the kind of product that customer wants, how the customer wants that product to be designed. We take all of those specifications into consideration. We record them in what is called a job card. A job card is a document. It can even be an Excel sheet. A job card can be an Excel sheet if you want it to be. So a job card is a document that includes the date that that customer came in to make requests for that job, the name of the customer that is asking for that job, the description, how the job, the specification or description of the job, the date that that job will be due, the cost of that job. So a job card is a document that includes all of this information. Then I've said again, a job card can even be on regular Excel sheet. Profit margin, here selling price equals 100%. When you hear profit markup, hear that selling price equals 100+%. That means total cost equals 100%. With profit margin, you're hearing selling price equals 100%. With markup on cost, you're hearing total cost equals 100%. I hope that is clear.
Yes, it is.
So batch costing is a costing method that is used. Batch costing is a costing method that is used when identical units are produced. What are you doing? Don't do that. Thank you. Thank you. Thank you. I don't want it. Oh yeah, okay. Thank you. Thank you. I'm grateful. Bye. Bye. Shut the door. Shut the door. Bye. So with batch costing, we are saying that we are producing identical units. With batch costing, we are saying that we are producing identical units. Yeah? But the difference in batch costing now is that we are producing identical units. However, we are still going to treat it as a job costing. However, in the product, so I have a few minutes. This class will end, and then I think we still need to reconnect.